Welcome back to the Nomad Hedge, everybody. In today's video, we will be taking a look at the S&P 500. We're going to glance over at the price action for Bitcoin, and we're going to be taking a look at the bond market and see how things are faring out there. So if you haven't already, consider liking and subscribing, and let's get into the video. So let's begin by taking a look at the S&P 500. And as we can see here, we're still trading above that 8 EMA, confirming that the bull market is intact. And what I believe this is basically a wave after wave, subwave after subwave. And this looks to me to be an extension of wave 5. So this could go on for a very, very long time if this is wave 3 and wave 4. So it's still subject to review with these weight counts. However, things are looking very, very bullish here. So there's nothing really to worry about, in my opinion. Now, if we take a look at some of the indicators, we can see here that the money flow index is beginning to look a little bit exhaustive here. We're seeing also the ADX, which is the green line here. The white line is actually the ADX line, but overall the DMI, showing that the buyers are in control, it's looking very, very exhausted as well. So previously, when we've reached level like this, that's when we've seen a little bit of a pullbacks in the markets. However, if you look at the Elliott wave oscillator and the MACD, they still have more room towards the upside, which is why this extension here is likely still gonna go on for many, many days or weeks ahead, if this Elliott wave count is correct and that this is in fact an extension of wave 5. Now we could see a catalyst for the market here. It's going to be that Fed rate decision. Everybody's pricing in now that we're going to see a 25 or maybe a 50 basis point cut, and so that could provide us with a little bit more fuel in the markets here, which will continue to drive the markets higher from these current levels. So we're going to be taking a look at Bitcoin and see how the price of Bitcoin is correlating with the S&P 500, and if we can find some clues where this market is headed. So let's begin by taking a look at Bitcoin here on a weekly chart. And if we zoom in a little bit here, we can see a strong reaction from this prior wave 1 primary. And it looks to me that this could be the initiation of a new wave here, that this correction in fact is or has concluded. And if that were to be the case, we're looking for a wave 1-2, and that could be a very, very strong upside move here, taking us above that $150,000 to $200,000 threshold. Now, this is how Bitcoin looks like on a monthly chart, and basically this long-term trend line here has been this defining moment where Bitcoin will be heading. And so if we're going to actually get a rejection again from this level, we could see a 30 to 40% drawdown before potentially finding support again, and then make another upside move here, attempting to break out from this trend line again. Or this will continue here, setting the stage for a new parabolic move towards the upside. Because remember, if this is a wave 1-2, an extension, or just the wave 3 would be a 1.618 extension from this price here. So that's going to be a very, very, that could take Bitcoin up to $150,000, $175,000 easily. Now, the reason why I believe that this trend line here will be broken towards the upside, we can take a look at how gold is faring out, right? So gold right here, this is a monthly chart of gold. And we can see what happened with gold here. You see here that this trend line here mimics somewhat the price action of Bitcoin. Now we could make some adjustments here and show it this way. But look what happened when we got a breakout here towards the upside. It was just a massive parabolic move here. And so that not a lot of people saw this coming. We looked at this back in 2024 and said, if we're going to get a breakout here, this is going to spark a massive move for gold. Now, we've been buying gold since 2010. This is how Bitcoin is looking. And on a monthly chart, this will, be a definitive moment here for the the history of Bitcoin, basically, because breaking above this trend line here is going to set the stage for a new cycle, right? And the continuation for any wave that's coming after that cycle. So that's how Bitcoin is faring out on a daily chart. I know this chart looks a little bit cluttering here. Again, this is the reaction level from prior wave 1. And so what we're looking here is basically the POC line here. This is the volume profile from the lows and towards the highs. And we can see that the POC line here aligns with the 0.618 retracement from the highs here. And basically what this is, I mean, if we're going to get rejected here, we can see prices making new lows again. If we're getting a breakout here, that means that we're likely going to see new all-time highs. And so for me, when I look at this structure here from an Elliott wave perspective, we can see that this looks like a wave 1, 2, and then you have a subwave here, 1, 2, 3, 4, and then 5. Maybe we get a reaction here, and then we're getting that last wave 5 here. And if that's the case, we want to retest this POC line here and then set the stage for another wave here, 1, 2, and that could be that parabolic move that we've been talking about that's going to give us thrust breaking above that long-term trend line we saw on the monthly chart. So things are getting very, very close here, and that's going to define the the outlook for Bitcoin for months now. So be ready to hit the buy button, and be also ready to get out or maybe short this market if we're going to get rejected from these levels. So that's how Bitcoin is faring out. We're going to be taking a look at the yields. We're going to start off with the 2-year, because I think that's tying into what the Federal Reserve will be doing today. So let's take a look at the 2-year Treasury yield. And this is basically very tied into the FOMC. So if we start to see low rates from the Fed, this one will move in conjunction with that. So I want you to take a look at this horizontal line here, because this has been acting as support for a very, very long time. And there's always this thing that the more often you test a trend line, the weaker it gets over time. And this could be the catalyst here for the 2-year to finally break this trend line. And we believe that it will target this 100% extension, which aligns at 2.646%. And that could be an area to watch later on if inflation going to tick up again. That's going to force the Fed to maybe start raising rates once again. So basically, this looks like an impulse here that's taking hold. Either we're looking at this as a W correction, basically a WXY, or if this could be a much larger correction. So that is why we're very conservative here, where the 2-year will eventually find support. And this price structure here looks impulsive. So we could be looking at something along the line of this, where you have 5 ways here, and basically this is an ABC, and this would be a WX, and then Y here. And so that's why we believe eventually yields will begin to move lower. If we take a look at the 10-year here on a weekly chart, we can see this trend line here has already begun to break, and we're looking for support here at the value area lows, aligning with this anchored VWAP and the 100% extension, and that would force the 10-year to move to around 3.38%. So that's how the futures market here for the yields are showing us that the likelihood of further rate cuts are likely coming now, and that this will set the stage here for the market to continue being on this risk on environment. And so if we take a look at the US dollar, we can also see that the dollar here has broken below the POC line. Also, if we move on to a monthly chart, we can see that this trend line here that began back in 2011 is officially being broken down here for the first time. So we're looking for a cycle here. It's a diagonal, obviously, because wave 4 is undercutting wave 1, but this 5 waves move here is looking to end, and it will end with this break of trend here. And that's going to set the stage for the dollar to move lower. So the yield's moving lower, the dollar moving lower, and that's always been bullish for the markets. And that's why this extension of wave 5, we see the markets going higher for that reason, because the dollar and the yields are moving lower. So that was basically it for today's video. We will be watching the market's reaction now after the FOMC meeting, and we'll keep you guys updated. If you haven't already, you can follow me on X. The handle is Nomad Hedge. Like and subscribe, and I'll see you guys in the next video. Take care for now.